Hello and welcome. You're watching News 9. I am Shweta Kothari. We're bringing you top stories from the world of business policy and economy. First up, the Reserve Bank of India's Monetary Policy Committee meeting is likely to keep rates unchanged at its three-day meeting this week. Inflation is easing and moderating well into central bank's tolerance zone. And FPI, foreign portfolio investors, pumped in as much as 43,838 crores in Indian equities in the month of May, the highest level in 9 months, supported by strong macroeconomic fundamental and reasonable valuations. TRAI, the telecom regulator, has directed service providers to set up digital platforms for customers' consent to curb promotional calls and messages, which means there could be a full stop on pesky calls very, very soon. And a lobby group represented by top beverage makers like Coca-Cola, PepsiCo, Red Bull is of the view that the recent World Health Organization guidelines on non-sugar sweeteners are not scientifically rigorous. What are the guidelines? We will discuss all that and more on this bulletin. The government is also working on a PLI, production-linked incentive scheme worth as much as 15,000 crores to encourage setting up grid-scale battery storage in India. All those details coming up on the show right here on News 9 with me, my colleague Amit Ranjan, joining here in the studio. Also joining us is Krishnakumar and Avijit Ghoshal. Gentlemen, appreciate you all taking time out. I want to come to you first, Amit. We're waking up to a bright summer morning here, Monday morning. As far as RBI is concerned, we were expecting the three-day meeting to start this week. It looks like there could be a pause. We don't know whether there's going to be a pivot or not.
It's a good thing. I mean, the increases were to keep inflation in control. As of April, it is 4.7, which is as against 7.8 the same time last year. So things are looking good. I mean, people would expect a reduction. But then RBI, the banks are flush with funds. So money is available due to the other thing that has happened, that 2,000 rupee notes are coming back into banks. So liquidity is there with the banks. So that control is there. So it's all good news.
Okay. Will it be a good news? Will it won't be a good news? Avijit, what is your view of what's going to come out of the Monetary Policy Committee meeting?
Look, Shweta, I think this is going to be one of the easiest things to predict this time. In the last MPC, it was really one of the big surprises that we were all caught by surprise. But I don't think today, or rather this week, anyone will be left guessing what the RBI can do. If the RBI hikes the rates right now, it will be out of all textbooks. Nobody will say that it ought to hike again rates, because inflation, the tiger seems to have been tamed finally. That's one. And the other thing is reduction. It's too premature. You cannot just slash rates right now. The inflation is just on the decline. So if you again stoke another round of inflation, that will be incredible. I mean, nobody will advise you for that. So the only thing that the RBI can do is to hold rates at this level, not only for this month, but I can also put out my neck and say, perhaps even for the next meeting. It might sound a bit premature, but I think RBI is is right now entering a sort of an autopilot mode over the next 2-3 quarters, and then again see when a reduction is possible. That's my take.
Okay, and I also want to understand, is this going to be a pause and not a pivot? Are we looking at RBI holding on to rates just as yet? And you pointed out that in the next meeting as well, they could hold on to any sort of increase in rates. But is this going to be a pause and not a pivot, or is this going to be a pivot because the inflation is well within the control now?
Look, I think there is no question of a pivot right now. It will be a pause. Look, there are two things that we are actually ignoring right now. We are just looking at the supply side. Now, at the demand side, what happens to the supply side, nobody knows. People are predicting a grim summer due to El Nino, disturbances in monsoons, perhaps slightly deficient rainfall. That is one possibility. The second is the ripple effect of the slowdown that's going to take place or is already taking place in the Eurozone and the US. So these two problems are there. So what that, the effect of that, impact of that is going to be, we have all to watch out. So the RBI can actually manage the liquidity and our appetite for goods. That can the RBI can manage. But according to the what's happening to the supply, RBI has no control over it. So watching holding rates right now is the safest and best bet that any prudent organization or institutions like the RBI can actually do.
Okay. Let's bring in Krishnakumar at this point in time. Krishna, good morning to you. Oh, we have lost Krishna at this juncture, but I also want to understand from you, Avijit, been a good May for India overall in terms of, from the UPI to the auto sales number to overall macroeconomic parameters that were released by the government. It was the last quarter of last fiscal year was also very good. We are hoping that India will be growing in the last, financial year about 7.2%. We don't know whether that number is going to be revised downward, but so far it seems like we are headed to a good start.
Well, absolutely. Just tell me, in how many years can we, recall having such a fruitful or productive month of May? I cannot really recall it right now. I perhaps have to rummage my notes to find that out. May has been one of the spectacular years in as the country is emerging from the gloom of both the inflation and COVID. Just see, everything seems to have turned. You go back to 1st of May, you come back to 31st of May. The pictures are completely different. As you said, the Q4 growth numbers, they have been the cherry on the cake. Also, look at most of the macroeconomic variables. As you say, the biggest relief is obviously the inflation. Growth is back, inflation is down. More important, what my colleague beside you told say, that despite rates being held at the current level, the liquidity is up thanks to this 2000 rupees recall. So all in all, you have money that the banks can loan to the industry without lowering the rates. So there is a lot of money. You also have the rates held on to the which you can hold on to the current level, and see the inflation coming down very dramatically. So obviously there is some advantage of the base effect, but then inflation is all about statistics and base effects. So the base effect actually irons out over a period of time. I think the inflation in in May will be equally at a comfort level. So RBI doesn't need to worry about inflation right now. Perhaps it only has to, the two things it has to watch out is perhaps the impact of any deficient train, if it is deficient in the first place, if there is a delay, so that can cause some problems. And the second is the impact of the Eurozone and the US. Because of our growing export sectors, that may actually hurt it to a degree which perhaps the RBI or any other institution might not have envisaged. So these two are the only sort of possible Achilles heel that the policymakers have to watch out for. Other than that, it is going to be quite a smooth run, at least even in June, that we can find out. Oh, I forgot to mention another thing, that is the GST, the revenue. Just look at the revenue of the government. I mean, this year I think the revenue position will be very comfortable because that free food scheme is gone. So a lot of the government expenditure is off their balance sheet, and revenue is growing. GST is actually growing very fast. This is the third month that it has been above the 1.5 trillion level. So all in all, where exactly do you see worries of worry points? I don't see any other than these two that I mentioned: deficient trains perhaps, and the Eurozone slowdown.
All right, I'm given to understand Krishnakumar is back with us. Krishna, we are of course discussing RBI's monetary policy meet and what could be the likely outcome of that. From what we've discussed so far, it looks like there may not be a pivot just as yet, but MPC, they're absolutely going to pause any hike.
Right. The fact of the matter is that for now, it's a pause, Shweta. It might become a pivot eventually. We don't know when it's going to become a pivot. For now, it's a pause, and also it's a continuation of the pause. That's the most important thing to notice at this stage, because you're talking about the second time around in recent times that the RBI is likely to hold on to its repo rate of 6.5%. And that's because this is a repetition for the month of April, and you're seeing this trend continuing simply because the inflation is easing. And some bankers, some analysts say that it will be the month of October by the time we see a rate cut, if at all. So, and we are in June right now. We have July, August, and September to go. So we're looking at the next 3 months where there can't be any possibility of a rate cut, which is the pivot that we're talking about over here. But there's a good chance that for the next 2 to 3 months there will be no rate hikes. So when it comes to those car loans and home loans, you can breathe easy that it's not going to go up any further. But there's a good chance that it could even become cheaper 3 to 4 months down the line. So as far as consumers are concerned, people watching this are concerned, I'd say just the same way RBI is waiting and watching on inflation, they should also wait and watch on the RBI and what it does with the interest rates before they go for that loan.
Absolutely. A wait and watch there by RBI and a wait and watch perhaps.
I just wanted to add a point to what Krishna was alluding. Absolutely. The rate cut might actually come just on the eve of the festive season.
But if at all there is a rate cut, that is an interesting story. We will of course keep coming back to that. But Avijit, another important story that you flagged, and that is with respect to foreign portfolio investors, which seem to have pumped in as much as 43,000 crore and upward of that in Indian equities. What exactly is driving that momentum?
Well, obviously, a part of it is driven by the fact that we were discussing, just over the last few minutes. The growing strength of the macroeconomic fundamentals of India is actually driving a lot of companies, a lot of these investors to India. That's one. In fact, if you scan the world right now, tell me another country of comparable size. I mean, you don't pick up very small countries. Just a big enough market which offers this sort of macro fundamentals that India does right now. You will nowhere get another parallel. The largest economy in Europe has already slipped into recession, right? It's officially in recession. The growth in the Eurozone is not going to be 1% under any circumstances, if at all there is a growth. The US is will end up perhaps even lower. And look at both of them. The US is still reeling under the debt ceiling, the effects of that debt ceiling. That's one. So if you are a foreign portfolio today, have a foreign portfolio sitting with billions of dollars, which country do you actually invest in? There are only a few economies only in Asia where you can come. And the best part of Indian market is the valuations over the last few months have come down, and so they really are sitting on pretty valuations also right now. So these two things taken together, I think will propel the FPIs to invest more and more in the Indian markets. Not only, look, over the last 3 months, I was checking out, the investments have risen. If you look at the net investments in the share market, in April, it was something around 6,000 or something crore. In March, in April, it rose to around 11,000 crore. And in May, it rose further. So I think the momentum will continue. Just look at the investments over the first 2 days of June. I am told, I just read somewhere, that it's more than 6,000 crores only in the first 2 days. Today again, just look at the market is rising. So it's all about right now, it's both about fundamentals and also the sentiments. Okay. Both are working in favor of India. So I don't think the FPI stream will dry up anytime soon. That's my take.
All right, that's a very interesting take. Krishna, what we're looking at, and also Amit, what we're looking at this point in time, are very strong macroeconomic indicators. Our GDP is good, likely to grow at 7.2%. We're also looking at inflation being tamed well within RBI's tolerance limit, strong industrial output. And the numbers that are coming in also indicate, Krishna, to you first, that we are growing at a pace which is faster than expected even by IMF standards, and all of that leading to more money coming in because the markets are better, less volatile, our fundamentals are strong. So there is an increased sense of faith that foreign institutional investors are putting in India.
Right. There is no doubt about that. We're talking about the story where it's at a 9-month high, which means that the flows have been very good for the last 9 months, and it's only peaking at this stage. So I would say, if it was peaking at this stage, I'd say that, I'm going to go be the devil's advocate for a second over here, because some of the stuff that I've been hearing from analysts over here, some say that all of this means that FPIs are quote unquote, FPIs and foreign portfolio investors are quote unquote overweight on India and Indian stocks and Indian markets, because they've already priced in all the increase that's possible. They've already bought and built their positions. So the FPIs are currently overweight, as in like they've done and more than that they normally would do, simply because of all the things that our colleagues are telling us. So that is basically, you look at the economies around the world. Literally every Western economy is on the brink of recession or in it already. So it's a difficult time. And also, even amongst emerging economies, you're not seeing the kind of resilience and growth that you're witnessing in India and the Indian stock markets, specifically speaking. The economy is a larger debate, Shweta, but as far as the Indian stock markets are concerned, they've had their falls, but they're going strong. You're talking about Sensex at 60K plus, 65K. I mean, this is the kind of market that we have over here, despite all the, despite COVID, despite all the, post-COVID economic issues, we're able to maintain the momentum as far as the Indian stock markets is concerned. And that is definitely instilling a lot of confidence in FPIs. But the question at this stage, I would ask as the devil's advocate, so to speak, is, are FPIs overweight on India already?
Okay, that's a good question. Amit, what are you making of these developments? You've been tracking, economy very, very closely, from inflation to banking system to all that is happening on the macro front. There seems to be a renewed interest in India.
Yeah. I'll take on from your phrase all-time high when you said the growth, 7.2. It was expected to be 6.9. A few people are saying that. So that is good. Apart from all these foreign investors look at indices. Look at PMI, Purchasing Managers Index. It was at an all-time high last August. It was at an all-time high in February. So those things are growing. So it is all good news. And India is one of the few countries that, to name a few, maybe it is Indonesia, Japan, who are basically doing well in these troubled times. And troubled times are basically increasing. You have El Nino on one side, whatever trouble it is causing, you have the war, you have debt ceiling in the
absolutely.
US, their rates are not going to stop.
Germany slipping into recession, that being one.
All of that. And so the bright spot, and it is basically India is probably leading a new group of nations that are basically going to weather this sort of storm even in the times to come. So where do FPIs go where they have to put their money? India.
The safest haven right now, as if I may
and
take
the brightest spot.
And the brightest spot. If I may say so, I may be incorrect, but that is an interesting story. We'll come back to that. Shifting focus now, TRAI, the regulator for all telecom operators in India, is asking them to set up a digital platform for customers' consent to curb all sorts of promotional calls and ask customers whether they want to receive those calls or not. So Krishna, what we are understanding is there's going to be one central platform where customers will be sent a one-time message asking them whether they want a credit card call, a debit card call, a call from banks, to call from retail customers and retail shops. And when they say yes or a no, depending on which, their names are going to be in that directory. And if they say no, they should not be receiving those pesky calls anymore. Is that correct?
Right. So it's going to begin with customer consent, and there's going to be a unified digital interface as well, a platform, unified digital platform. That's what this entire thing is all. But there has never been one before, Shweta, prior to this. And now there's just exactly 2 months' time for telecom operators to set up this platform, digital platform that the TRAI, the Telecom Regulatory Authority of India, the Telecom Regulator of India, has now given the directive to telecom companies to set up, and that will begin. It will essentially get consumers' consent and also keep asking for consumer consent at every level. Not like they gave consent one day and then it's over. They need to seek, maintain, and revoke.
Right.
Consumers' consent, depending upon when they want to give it and when they want to take it back. And this is called the Digital Consent Acquisition Facility, the DCA. And it will begin. Phase one is all about, first you ask the customer, the consumer, whether they are giving the consent for getting promotional messages or not. There is the question is not even thrown to the telecom companies. It is not even thrown to any other principal entities, insurance companies, finance companies, none of them. The consumer first decides, and of course, all these numbers are listed numbers, registered numbers, unregistered numbers. So this is sort of like the final crackdown, if I may, the beginning of the final crackdown, because we have a deadline on this. 2 months from now, we will need to see what this digital consent acquisition or DCA facility is looking like. Now, even before that, there's a common short code starting with 127 for sending consent-seeking messages, and then the TRAI has asked telecom companies to use this 127 short code for getting consent from the consumer. So, no means no is becoming more and more clear as far as pesky telemarketing and phone calls are concerned, Shweta.
Okay, interesting. I think the operative word here is consent, Krishna. And I want to understand from you, before I bring in Amit and Avijit into this, when consent is asked, whether it's going to be asked periodically or there's going to be a one-time consent and then you can revoke it as and when you like. How does that work out?
Right. So we don't know the finalities of how this whole thing is going to work out finally.
Okay.
But what is happening right now, what we need to keep in mind is that this has been spoken about for a very long time, this digital consent acquisition facility. There was, this was an idea that was mooted before, et cetera, et cetera. The fact of the matter is that despite everything, despite even Truecaller apps on our phones, we're still getting these, pesky telemarketing phone calls. In fact, Shweta, what's happening now with some of these people whose numbers have already been found out as spam numbers, they're calling from their personal numbers. Some of these telemarketers are now calling from their personal numbers so that your phone can't track them. That's where things have reached, because they've got deadlines to catch up with. They've got, things that they have to give their superiors as to be making so many calls and making so many sells. So they are now resorting to all kinds of measures to do telemarketing, and it's a very dangerous situation over here where it's the entire pesky telemarketing, messages and phone calls are getting uncontrollable despite new technology coming in, despite an app specifically being there to screen calls and etc. etc. So.
All right, I think we seem to have lost Krishna there, but very interesting. A facility, a digital facility, only to track people who've given consent to getting these promotional calls. If they say no, they are not likely to get those calls and pesky messages. And this is a problem each of us face. Amit, this is a daily problem, from marketing, telemarketing calls to, banking calls, and all of which we have not really signed up for. So it looks like there is a deadline now, which is all the more important, because at least if that deadline is met, there could be an end to this menace.
Yeah, the operative word is if that deadline is met, and that's going to be a very difficult task. You must remember the service providers, as Krishna was saying, are already giving you certain services where you can block calls, but it doesn't happen. So it's going to be a very huge algorithmic or technical sort of exercise. And I hope that happens, because if that happens, and if it does, if we do get to a place where these calls are stopped, it's going to be a big achievement even for the TRAI, leave aside the service providers. And of course, consumers will be only too happy about it.
Okay, consumers will only be too happy.
But let me repeat, it's going to be a humongous task
Absolutely.
to basically achieve it.
Right, and in fact, from what I'm reading at the moment, considering the volume of the work that is involved, TRAI has in fact allocated 2 months, as Krishna was pointing out, to develop such a facility by allowing providers to implement this in a phased manner. Let me bring in Avijit at this point in time. Avijit, are you of the view that this is going to be a humongous task, as Amit is pointing out and Krishna alluded to? This is going to be in a phased manner. This cannot be done overnight, but this is something that, and let me put it this way, I see this as a two-faced problem. One where your data is easily available to all these telemarketing agencies, to these people who are hoping to acquire you as a customer, and on the other hand, the inability of service providers to put a stop to this. So while, you know, on the first problem, there seems to have been a little to no relief. On the second problem, TRAI has at least set a deadline saying you come up with a facility, a digital facility, you take consent, and if there's no consent given, then kindly stop bothering customers.
Yeah, you are absolutely right. One is there couldn't have been a more appropriate step in the right direction. This is one. But the point that you harped on, it's going to be a humongous task. Absolutely. In fact, I think 2 months is too short a time, and there has to be extensions for this. That I'm pretty sure of. But I have a slightly, different thing, a question rather, as to see, we are all bothered with pesky calls. I mean, there is nobody who will welcome these calls. But I will perhaps, also want to know most of these companies who employ these sort of telemarketers, and we know there are everybody. I mean, from flimsy services to very real services like banking and automobile selling, whatever. There are all marketers, they employ these sort of telemarketing agents. Now, how many of these calls or what fraction of their attempts do actually turn into sales? This I am very interested to know. Perhaps it can be a more elaborate study to find out the quantum or fraction of these calls that turns into actually sales. Because I'm sure if it does, all these companies, they know whether and how much of these effort actually translates into sales. They are not going to let off their sales so easily. So on the one hand, even if this system is put in place, you might get fewer phone calls, but I'm sure you will be receiving a far bigger volume of SMS messages or WhatsApp messages, because all these data is already with them. I don't think if they are prohibited from calling, they'll also be prohibited from messaging. So soon your mailbox will be full, absolutely full of messages, thousands of them, which you will be continuously deleting. Believe me, in my phone, I have the number of blocked numbers is perhaps more than the number of contacts that I have. So this is actually what we end up with. So I'm not sure whether we will perhaps see the end of one avatar. Perhaps it will emerge as a new avatar.
Okay. And Krishna, it's not like the consent was not sought before this, but consent was sought individually by all these telemarketing agencies, as you were pointing out. But these were individual, entities who were seeking consent. There was no central register, and the move to have a central entity sort of, it makes it easier for telecom operators to track who are the customers that have agreed to get a call and who are the customers who really don't want to get a call.
And therein lies the conundrum, Shweta, that I think that's there in all three of our minds, Avijit, yours and mine. Who are these people who are going to say yes? The question. I want to know
who says yes.
I thought a crackdown meant they just say don't bother them. There is enough and more advertising. There's digital advertising. There's so much free internet. There's so many ways in which you can promote your product. The last way, I don't know who's happy, who says, oh, that's the financial product you're telling me about. I totally want to buy this from this complete stranger who's telling me this from the phone. And I'm going to invest my money because of it. I'm going to buy an insurance policy like this. I'm going to buy a financial product like this. Who are these people who say these things, Shweta? I'm curious to know. And then, okay, the other problem is, or rather, the other interesting part is they talk about only whitelisted numbers to be allowed, which means that there is going to be this white list of people who are allowed to call you and sell you things. Avijit, would you be okay with that? I mean, just out of curiosity.
I won't.
No.
Krishna, this list will vary from individual to individual.
Absolutely.
True. So so anyways, away from the conundrum, maybe deep down inside, we do like certain products and we want to be told about it. And certain genre of products, maybe insurance is not what you want to buy on the phone, but maybe other promotional things that you're okay with, you wouldn't know. Even real estate, some people might want to know on the phone, and some new interesting real estate project is coming up. You never know. So the idea is that the white list is going to come up, and the more, as Avijit is telling us, and the white list is going to be different for different people. And more importantly, I think there'll be one central whitelist which will be approved, from where a consumer can say yes or no. Say, for example, 100 names are part of that whitelist who are supposed to, who are allowed to promote products and services to you. Then out of the 100, you might give your consent for 10 or 20 of them, just as an example. So, and more importantly, Shweta, that consent is not once in a lifetime agreement. That consent changes. So it'll be interesting to see how they continue to maintain that consent process, because if you see that problem happening with in Apple phones, or when you download apps, you have this long list of things, terms and conditions that you're supposed to say okay to in a jiffy, and that's it, that's the end of it. And I really hope that more calibrated ways of getting consent and maintaining consent is done as far as this digital consent acquisition facility is concerned.
Okay, interesting there. Amit, you wanted to come in at some point.
No, Krishna has alluded to that you have to, how do you keep updating it, this list? So every time you use your phone, your number is out there one more time. So you have a list today, tomorrow you use your phone to purchase something, your number is out there with another set of people. So basically updating this list will be another challenge. And so let's see, 2 months is not too far away.
2 months is not too far, of course, and a central digital consent acquisition means that it is going to be a yes or a no from a customer who wants to get those marketing calls or not. We'll of course have to wait and watch out for when that gets implemented. There's a deadline there of 2 months, and a close one at that. We will come back on that story. But shifting focus for now, a lobby group that is represented by Coca-Cola, PepsiCo, Red Bull, Dabur, Tetra Pak, and among other big major players in beverage industry have asked and said that World Health Organization guidelines on non-sugar sweeteners are not scientifically rigorous. Now remember, WHO recently came out with guidelines, and very interesting one at that, saying that non-sugar sweeteners like aspartame and stevia do not help in weight loss. In fact, they increase the risk of certain diseases, and the industry doesn't seem to be very happy about that, Amit.
With the colas and most of these drinks that are in the category, I don't think so the consumer is really cares about what is in there, because everybody knows they are harmful. The sugars that are used, whether they are sugar-free sweeteners or non-sugar-free sweeteners, they are harmful. So that's not the question. I believe why these companies are coming together to basically contest it is post-COVID, they are growing at double digits and they want to maintain that. And they don't want any of these, put in, for want of a better word, nuisances to come in the way.
Right.
Of course, it's coming from WHO, so you have to look at it. But I believe that is the real issue, that they want their margins to keep on going. I don't think so the consumers really care about what is there in these drinks specifically. I don't think nobody does not know that it is harmful. So yeah, so that is my take on this.
Okay, interestingly, because what WHO said and her health groups have been asking for, and Krishna, I would want you to come in at this point, is that there has to be a label that these are for restrictive use only. Do not use them as a substitute for your daily sort of health drinks. These are not healthy. They are in fact likely cause of a lot of diseases. What exactly did WHO say that the industry is not really agreeing to and calling it unscientific, if I may say so, not scientifically rigorous enough?
Now, clearly, sugar is a highly contentious problem as far as mass-produced consumer goods are concerned, and clearly, there's been a lot of back and forth of the kind of sugar that you need to use. Clearly, that the visuals running, that white sugar is one thing that nobody wants to use as far as mass-produced goods are concerned, because that kind of sugar is the one that's very readily, easily flagged off by the likes of the World Health Organization. But what has happened now is that the non-sugar sweeteners, which, there is so many varieties of non-sugar sweeteners, which many of us believe are actually better than sugar. They don't have the negative aspects of sugar, yet give the taste of sugar. And hence, when you drink these, beverages that you buy, juices that you buy, or aerated drinks that you buy, you have these non-sugar sweeteners, and, you have the zero version or the zero-calorie version of these aerated beverages also available, and so in that scheme of things, where it's become industry practice to use non-sugar sweeteners because of the prior research done before, including research done by WHO at some stage, And clearly that research has been updated, at least by the WHO. And WHO now says that non-sugar sweeteners are completely, completely unhealthy, and they should, they have side effects, and etc., etc. Whereas the companies who have taken all the precautions to to use particular non-sugar sweeteners so that their products become legally viable to be sold across, because you're talking about excess sugar content in all these things being cracked on, happening from in Western countries, in India as well, and now at a global level there's a crackdown on sugar. And that crackdown on sugar has led to these companies using non-sugar sweeteners. And now WHO turns around and says these non-sugar sweeteners are also harmful. Where do these companies go? And that seems to be the conundrum over here, as far as I'm concerned, Shweta.
Right, and before I let you go, I also want to bring in Avijit very, very quickly into this conversation. Avijit, this is interesting because this also comes on the back of, and we've discussed this extensively here on Newsline, on the big Bonvita controversy, how it appears that consumers are not aware of what they're consuming essentially. And when you see on a label that says 0 sugar, you are convinced that this is a better alternative. But what WHO right now is saying is it's not healthy. So don't fall for that charade.
Absolutely, absolutely. What Krishna was saying, I mean, I agree with him word by word. And there is another point that I wanted to make. See, a part of the WHO stricture is also aimed at that health conscious brigade who are growing and for whom the sugar is an untouchable product. So, so they were switching en masse to this non-sugar sweeteners. So even that segment has today been ticked off. See, we will see a lot of reports right now that there has been a dip in sales of the beverages in North India, especially even during this summer months, where the summer has been slightly merciful compared to the other years. But I don't think it's only due to the lower mercury. There must even be some effect of this WHO stricture, the warning that stay away from this. And they have left actually nothing unsaid. The way they have drafted their statement, I went through it when it came out. It actually makes it very, very clear as to what are the compounds that they have flagged off as red flag, and the sort of category of food that you should be staying away from. So a part of this dip you can actually also attribute to this WHO warning.
Right. Interesting developments there. That is a very interesting story. We will of course keep coming back on that. I think with that it's a wrap on this edition of Newsline. Interesting story coming out in form of whether you should be consuming sugar or not. Remember, that is a story we keep tracking here on Newsline. We will bring you more details on another show another time. Thanks very much for watching.